You are listening to The Vocal Technologist. Spoken tech for your ears.
Welcome along. Today we're jumping into the whirlwind of changes happening in finance and payments and artificial intelligence. It's right at the heart of it all. We've pulled together some key updates, kind of a shortcut to understand what's really moving the needle.
Exactly. We're here to unpack how AI and what we as consumers want is reshaping everything, from your grocery payment to how banks actually operate. We'll try and connect the dots on why it matters to you.
Okay, let's kick off with a big one, Apple Pay. It's climbed surprisingly high, hasn't it?
It really has.
Fifth most used online payment globally now. It's on over 5% of websites. That's ahead of Shopify Pay, even Google Pay.
And the drivers. Speed, yes, but also security. That's huge.
Right, the biometrics, the tokenized transactions.
Yeah.
Consumers just expect that seamless, secure experience now.
It's become the baseline. And that expectation, well, it links directly to some wider shifts, particularly regulation. Look at CurvePay, first wallet in the EEA, that's the European Economic Area, to directly compete with Apple Pay on iPhones.
Because of the new EU rules opening up Apple's NFC chip.
Precisely.
Yeah.
Which, raises big questions about real consumer choice and competition.
Definitely. And talking about how we interact with payments, the whole checkout process itself might be, well, disappearing.
It's a fascinating idea, isn't it? This concept that the traditional checkout page is becoming obsolete.
With things like AI agents, Google's Shop with AI mode, for instance, making transactions happen before you even hit a website.
Which means things like fraud checks, conversion optimization, they're moving.
Moving upstream, right? To where the intent happens, like in ads or chatbots.
Exactly. So for merchants, it's less about optimizing a web page and more about how do you sell to an algorithm?
An AI agent becomes the primary customer. That fundamentally changes the whole journey.
It really does.
And AI's impact is obviously way beyond just payments, investment, lending.
Oh, absolutely. Take Nick Storonsky, Revolut's CEO.
Right, his new VC firm, Quantum Light. What is it, $250 million?
Yep. And the whole idea is using AI to make investment decisions, trying to strip out human bias.
And we're seeing real-world power already. Stripe, for example.
Yes. Their use of large language models, LLMs, they boosted fraud detection. I mean, the numbers are pretty startling.
What was it? From 59%.
To 97% detection for attacks on their big users. It's not just an improvement. It sets a whole new standard.
Wow. Okay, and then there's Chestnut, calling itself the first AI-powered mortgage lender.
Using LLMs again. To underwrite price, fund mortgages. They claim in minutes, not weeks.
Faster decisions, maybe cheaper loans by cutting out a lot of the human element. That could really shake up mortgages.
It could. And AI is also touching buy now, pay later, BNPL.
How so?
Look at Pagaya Technologies. They're an AI lending firm. They're getting into BNPL by backing Klarna loans. What's interesting is their AI underwrites these second-look loans for people with slightly lower credit scores.
So Klarna can approve more customers than maybe a firm who tend to focus on higher scores.
That seems to be the strategy, yeah. Expanding the potential customer base using AI risk assessment.
Right. And it's not just the fintechs driving change. Traditional banking is feeling the heat, too.
Definitely. You see companies like Square, Stripe, Ramp, Brex. They started maybe with payments or cards.
And now they're offering full banking suites for small businesses. Checking, savings, credit, the whole package.
And then you have challenger banks pushing into new areas, like Mercury.
Known for business banking, now launching Mercury Personal for consumers.
Yeah, debit cards and offering, get this, up to $5 million in FDIC insurance, even while facing some regulatory questions.
That's bold. Shows that tension between innovation and, well, compliance.
It does.
And in digital currency, we're seeing big banks exploring stablecoins now.
That's right, big names. JP Morgan, Bank of America, reportedly looking at a joint U.S. dollar-pegged stablecoin.
Aiming for use within the banking group itself signals a deeper potential integration.
It certainly does, and maybe a smaller change, but one you'll literally feel in your pocket, or lack thereof.
The penny.
The U.S. Treasury plans to phase it out from next year.
Why? Just cost.
Pretty much. It costs, I think the figure was 3.69 cents to make and distribute a single 1-cent coin this year.
Yeah, okay, that makes financial sense.
Doesn't it just?
And finally, a sign of the times from traditional banking. TD Bank.
Right, restructuring. Cutting about 2% of staff.
And winding down a big U.S. point-of-sale financing portfolio, about $3 billion.
The goal. Saving money annually, sure, but crucially, reinvesting it.
Into digital and AI capabilities.
Exactly. Even the giants are pivoting hard towards this new landscape.
So quite a tour. The rapid changes in payments, AI becoming, well, almost omnipresent, and big shifts in fintech and traditional banks alike.
It leaves you wondering, doesn't it? As everything gets more digital, more AI-driven, what new kinds of value are going to emerge, and maybe what new challenges are coming that we can barely imagine right now. Something for you to think about, how these shifts might play out in your own financial life.
You've been listening to The Vocal Technologist. Tune in next time.